Let's first start with the accusation. You lost me $100 on SoundHound AI. So is it my fault that this person lost money on this stock? And that's what I want to talk about here in this video. Whose fault is it? Because whoever you assign blame to is going to dictate a whole lot within your journey and understanding of trading and investing. And it's actually really, really important, because if you're not assigning fault in the right place, then you're going to get a distorted view of things, and you're going to cause all kinds of headaches and cause yourself to waste all kinds of time. And then there's also some other things that I'll cover too that kind of lend themselves to this whole conversation. But the first thing I just want to point out is, just as a broad whole, you're not going to ever improve really in anything in life, but certainly not in trading, if you're not accepting responsibility and looking at the person in the mirror. If you're always just thinking, you know what, it's not my fault.
It's their fault. That's right. It's their fault. It's their fault. It's their fault. You have failed and you will pay.
Then you're never going to be able to actually get better. Think about it. It's freeing. If you're the problem, that means you're also the solution. So just keep that in mind. Now, this all comes from the comment being from one of my analysis videos where I look at charts and I'll make comments, point out supports and resistance levels. And within the context, I'm saying some very, very key words over and over again. And I repeat these over and over again because they're truths that reveal a lot about, you know what, just keep this in mind. Keep this in mind. And if you've watched my video, and I mean, this person was watching, but I don't think they were actually listening.
You haven't been paying attention.
Because I say things such as, there's no such thing as a guarantee. Hey, you know what? Somebody's gonna be right, somebody's gonna be wrong. That's why you need to manage risk. And I make comments like that time and time again. In fact, some people give me grief. Yes, Clay, we know there's no guarantees. Yes, we know that just because it's been a support in the past doesn't mean it'll be a support again. So I get grief from some people, but clearly in this situation, the person wasn't quite listening. So just keep that in mind with my analysis videos. If I call something a support, that doesn't mean that it's guaranteed to be a support in the future. I mean, if only trading were that easy. All I'm saying is, you know what? In the past, this has acted as a support. So it's at least likely, it's at least rational to think that it could act as a support again, but that's not a guarantee. And that's what I'm guessing this person did. They heard the word support and their mind went to, okay, therefore the price is automatically going to bounce from that area. No, that's not how the markets work. And so in this situation, it was your fault for apparently not, managing risk or not doing what you needed to do. And then this goes into the final thing here that I really want to point out, and is the most important thing is, well, whose fault is it? It's not my fault, and it's not this person's fault, assuming this person has an actual strategy. So let's assume that this person has an actual strategy. Then you know what? It's not their fault either at the end of the day. How so? Because, well, the markets are random. Therefore, it's the market's fault you lost money. Just like it's the market's fault if you make money. If there was a perfect holy grail strategy where nobody ever lost, well, then you could say, yeah, it's my fault when I make money. But that's not how it works. Is you could have a valid strategy, but sometimes it's just not going to work. It's not your fault. It's not somebody else's fault. It's just the market's fault, because the market is random. And our job as traders is to always just try to gain an edge. Try to look for logical situations, which again is what a support or a resistance or a moving average is helping us with. Looking at candlesticks it's not guaranteeing anything, but it's helping us to determine, okay, that looks logical. That seems like, 6 out of 10, 7 out of 10 times it's going to do a certain thing. And that's where you start to develop win rates, and you want to get win rates, ideally up over 50%, but you're never going to always be right. So whose fault it is the market's fault. Now, I want to set that aside too, and also open up the door. It could be your fault though. Meaning if you're out there just acting like a degenerate, you don't actually have a strategy, you're just behaving totally irrationally and randomly, then in that situation, you're definitely going to want to look in the mirror and say, okay, it is my fault in every regard because I don't have a strategy at all. I have very shallow understanding. Or maybe no understanding at all. So it could be your fault in that situation. But that's why earlier on, I was trying to operate under the premise that you do have a valid strategy. So if you do have a valid strategy, then you know what? Don't blame yourself. And why am I saying to not blame yourself when earlier on in the video I was saying, hey, you should blame yourself because that's how you're going to improve. Well, if you have a valid strategy and then you blame yourself, What are you going to say? Well, my strategy is not valid. Like, I need to fix something. And that's where you can spin into all sorts of different rabbit holes of trying to fix a strategy that's not actually broken, because you're blaming yourself for the problem when the problem is actually just, well, the markets are random and no strategy is going to work every single time. So that's where things really get sketchy. I understand, Clay, you're all over the place. So let me just summarize. If you have a valid strategy, don't blame yourself, because if you blame yourself, that's going to have the implication that you need to change your strategy. But that would be a contradiction, because I just told you it's a valid strategy. So why would you want to change a valid strategy? That's why in that situation, blame the market, and because the market's just random. Now, the other category, if you're out there just acting like a degenerate, you don't have a strategy, you're just randomly doing things, then yes, blame yourself in that situation, because you do not have a valid strategy. Therefore, you need to get a valid strategy, which is going to be obtained by you, and that's why you need to blame yourself. So like I said, things can get a little gray, but if I'm doing my job right here, hopefully I'm kind of separating things out black and white. So don't blame me for your losses. Maybe blame yourself, but if you have a valid strategy, then just blame the market so you don't go and start to rework your strategy when it doesn't need to be reworked or doesn't need more rules or anything like that. But it might. And that's why trading is very hard, because when it's your strategy officially valid, hey, you know what? That's what makes trading, along with the emotions, the big challenge. So no, it was not my fault. It was maybe your fault, but at the end of the day, it was the market's fault, because the market is random. And as soon as you just accept that, your life's going to get better, because you're not going to have some sort of expectation that you're always going to be right within a strategy. So I hope this helps. I hope this person starts to blame the right thing and can identify what needs to be blamed. But one thing I can definitely say, don't blame me. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up, as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.